Brendan, thanks very much for joining us on the show. We interviewed you 3.5 years ago, and since then, a lot has happened in the market. So maybe to kick things off, can you tell us about what's happened since we last interviewed 3 years ago up until the beginning of this year? How have you seen the market and what sort of changes have happened in the market?
Yeah, sure. Good question, John. Good to see you guys again. I think in over 3.5 years, I lost a little bit more hair by the look of it, but it has been a pretty interesting time. Obviously, the used car market, we keep our finger on the pulse as best we possibly can, and we watched it soar. It just kept climbing basically right through to around April 22, with a few different times where it would sort of plateau and then lockdown would occur again and supply would be really challenging for new car supply. So the used car prices had jumped to the next level we've never thought they would sort of get to. So worked really closely with our big government and our fleet vendors and the financiers and everybody. It just kept watching these prices climb, but they obviously had to climax somewhere, and they did about 50% higher than what they were pre-COVID. That was really the maximum they sort of got to. And then since that period of time, the market started to dampen a little bit. It started to come back, and a few different drivers to that. I think obviously the economic climate that we've sort of seen, and inflation, interest rates, and like over the last 18 months has meant not as much demand for used cars. Also, some more supply coming into the market. This is another thing. So obviously the prices grew because of a shortfall of used vehicles. And then some new cars coming in, obviously to plug some of the gaps over the previous couple of years, meant that more vehicle availability, and so the prices have sort of come back a little bit now, and they're sort of hovering around 35% higher than what they were pre-COVID. So still very much a lot higher than what they were pre-COVID, but just not the really lofty heights as we saw back in April 22 or Easter 22 is when things started to change.
So you're saying, Brad, so the prices are coming back, but they're not back to what pre-COVID was. And we're starting to hear that there's enough supply of new cars now it's sort of just starting. I suppose it's still early days to tell for that to wash through. But what's changed since the start of this year? Like I'm just thinking, so particularly 2023, we're almost at the back end of it. 2020, we had the big spike. We had that, you mentioned that March, April 2022 was the 50% above what pre-COVID was. What's happening in 2023, and what are you starting to see now?
So we are seeing some more supply come through. It's, when we look at, say, what VFACTS releases, still about 55% of new cars going to consumers, but 45% going to business, rental, government, and that's a big segment for what we sell. But we're also seeing it, most of our customers are still saying they've got the biggest pipelines that they've ever had in terms of new car replacement, but they're certainly getting a lot more phone calls from the dealers and the like with cars that aren't being placed with consumers, and the dealers are certainly saying that there's been more cancellations from consumers of late, just because when they go and redo their financials, because of interest rates and other bits and pieces, they can't really put those customers into those cars. So the customer steps away from that original order, and therefore the dealer's got a vehicle on hand and they want to be able to sell that. So they're reaching out to their more corporate type customers, and those cars are then making their way through to us. I think we are seeing more consistency from a production level. We monitor through Datum Insights, our data analytics business. We monitor production levels globally as well. So, the likes of China, Japan, and Korea don't really have much of a supply issue, and they're mostly back to pre-COVID levels or greater in the case of China. And there's a big chunk of Australian new car deliveries come out of those three regions in particular. So, with healthy supply from those manufacturers and out of those areas, they're certainly making their way through, becoming available, not being picked up by consumers, and therefore making their way through to big state governments, all the FMOs, councils, not-for-profits, those kind of segments that are our strong suit in terms of what we sell day to day.
So with a question around the vehicles, because this is... there's been a lot of talk around, leases got extended during COVID and the month and the years after, subsequent years afterwards, because we're looking at a 1.2 million car market for 2023, which is amazing when you think that you would have thought we would have caught up by now with the drop that 2020 gave us, where it dropped down to about 980,000. But we've been over that 1 million, 1.1 pretty much since then. So we only really dropped out 50,000 cars in 2020, but you would have thought we will have made up. The car parks got bigger, so there's a million more cars on the road. I'm keen to get your observation and the feedback from, say, the fleet customers so they've extended their leases, would it be fair to say, in 2020 and 21 because they couldn't get replacement stock. Does that mean the cars that you're getting back are older than what they normally would be, and they've got higher Ks than what they would normally be, and the condition's not as good as what they'd normally be?
That's true. And I think that's also led to some of the reduction in used car pricing, because we are seeing more and more of those vehicles that were extended or they're in inertia, as the fleet companies refer to. And that you're right, the condition has deteriorated. We're seeing greater unfair wear and tear. That we diagnose that for most of our government, our fleet customers. So we're seeing more and more of that come through. So I think the average age of a fleet car these days is north of 5 years, where it used to be around 42 months from memory. So that's a pretty good indication of the sort of the overall new sort of vehicles that are coming through to us or the vehicles that are coming through to us on a regular basis. I guess that's going to be like that for probably another year or so, till it sort of washes out and all of those really large backlogs of orders get washed through, because again, the fleet companies have got really large pipelines of vehicles to be replaced. And so, I still think there's quite a large, probably still 250,000 vehicles on back order, as we understand. And I know some of the big retailers have sort of mentioned that in the press as well. And that's sort of what we think, if we look at that sort of dip between 2020, 21 and 22, it's a fairly large gap there. And so I think there's still some time for that to play out over the rest of 23, 24, maybe into 25, while that all catches up. So yeah, I think there's a lot of used cars that there'll be more used cars sold over the next 12 to 18 months in particular, as they work through some of that backlog.
So would it be fair to say also that with those 250,000 cars that are yet to be replaced, during the last 3 years, would it be fair to say that the OEMs and the dealers favoured private retail buyers over and above the fleet operators like the leasing companies and the government, etc.? So they've extended, which is why you've got that back order of 250,000. And because we still had 1.1 million cars being sold over the last couple of years. So that means more have gone to retail than fleet. So fleets sort of there's still some momentum in the new car market from a fleet perspective, which also means used cars. There's the starvation of good low kilometre used cars. Like you can't get a good low K ex-renter because they've all got high Ks on them. Yeah,
agreed. There is a shortfall of that low kilometre. Even the OEM sales that we would conduct, a lot of the vehicles that they would typically turn over on a 6-month basis for their staff all basically got extended out for at least 12 months so that they could prioritise stock getting through to the consumers, because they just had such shortfalls all over the place. So none of the OEM levels are back to what they were pre-COVID yet, and they may never return potentially as well, which is interesting. But there is certainly if we see younger stock come through, it's climbed all over by the trade and the consumers that buy from us directly, because it's a little bit different as opposed to things that are now, there's a lot more assets that are 4 to 6 years old than that used to be 3 to 5, and everything's kind of, which was probably going to happen, with the extension of warrant. Some of this may be just fleet changes and policy changes too, because warranties all of a sudden went from 3 years, 60 to 5 years, 100 or 7 years unlimited, right? So there was always going to be the aging of some of those vehicles as well. So maybe it's a little bit disguised as part of that as well, but there's no government that runs a 2-year 40 policy anymore.